for assets central banks are quietly buying before a currency reset. What if the biggest financial event of your lifetime has already started and nobody told you? What if the very institutions that print your money are secretly dumping it and buying something else entirely? The currency reset that most people dismiss as conspiracy theory is actually unfolding right now, hidden in plain sight inside central bank balance sheets. Stay with us. The next few minutes could completely change the way you see money, wealth, and your financial future. Here is the truth. Your bank, your government, and your financial advisor are almost certainly not telling you. The global monetary system is being quietly dismantled and rebuilt, not with a dramatic announcement, but through thousands of deliberate transactions made by the world's most powerful financial institutions. And the four assets they are accumulating right now tell us everything about what is coming. Let us start with the most jaw-dropping number in this entire story. For the first time since 1996, gold has overtaken U.S. Treasuries as a share of global central bank reserves. Let that sink in. For 30 years, U.S. Treasury bonds were the unquestioned cornerstone of global finance, the safest, most liquid asset on Earth. That assumption has now quietly collapsed. Gold's share of reserves has climbed to 27%, while treasuries have fallen to 23%. The value of gold, held by foreign central banks, is now approaching $4 trillion, exceeding their roughly $3.9 trillion holding in U.S. debt. This is not a small shift. This is a seismic, generational reversal of the financial order. So why is this happening? The U.S. national debt has surged past $37 trillion. Interest payments alone now exceed $1 trillion annually. The U.S. dollar index fell more than 9% in 2025, its worst performance in 8 years. And the dollar's share of global foreign exchange reserves has dropped from 71% in 1999 to approximately 58% today, when the world's most powerful central banks stop trusting the world's reserve currency. That is not a rumor. That is a fact recorded on their official balance sheets. Now, the four assets they are urgently accumulating before the reset hits. Asset number 1, physical gold. Central banks purchased 1,136 tons of gold in 2022, the highest annual total since 1,950. They followed that with 1,037 tons in 2023, the second highest on record. And in 2024, they added over 1,000 tons again, a third consecutive year of historically extraordinary buying. China's People's Bank extended its buying spree into early 2026, marking more than 14 consecutive months of additions. India raised gold's share of its reserves to a record 16%. Turkey, Poland, Qatar, Guatemala, Indonesia, and Malaysia have all been active buyers. According to the World Gold Council, 43% of central banks plan to increase their gold reserves in the next 12 months, and nearly 70% plan to increase their gold share over the next 5 years. But here's the part that should shock you most. Gold is not just rising in price, it is rising while central banks are simultaneously draining physical supplies. Some analysts describe as many as 300 paper ounces being traded for every single real ounce sitting in a vault. That system is quietly unwinding. When it fully unwinds, the price of physical gold could move in ways most investors are completely unprepared for. Gold crossed $4,500 per ounce in 2025, ending the year with a gain of nearly 70%. Since the year 2000, the US dollar has lost over 85% of its value relative to gold. Why does gold matter so much to central banks? Because gold is no one's liability. It cannot be printed, devalued, or frozen by a foreign power. When Russia's dollar reserves were frozen overnight after the 2022 invasion of Ukraine, central banks around the world got a clear message. Dollar assets can be weaponized. Gold cannot. It has no counterparty risk, no password, no off switch. That is exactly why central banks are hoarding it. Asset number 2, silver. While gold dominates the headlines, silver is quietly reasserting itself as a monetary metal, and this is one of the most underreported stories in global finance today. Silver has a dual role that gold does not. It is both a monetary metal and an industrial powerhouse, critical to electronics, solar panels, electric vehicles, and medical devices. That industrial demand creates supply pressure on top of growing monetary demand. Central banks have already been confirmed as buyers of silver, according to recent reports, and analysts believe this is only the beginning. In early 2025, the gold-to-silver ratio approached 90, a historically extreme level. When the ratio reaches these extremes, silver has historically staged dramatic catch-up rallies. And since that point, silver has outpaced gold, stocks, and bonds by a wide margin. The silver market is far smaller than the gold market, meaning that when institutional money flows in, price movements can be explosive. The fiat systems historically collapse. Gold functions as the escape vehicle for large-scale wealth preservation, while silver functions as the everyday transaction metal for ordinary people. Gold is freedom. Silver is survival. Asset number 3, non-dollar foreign exchange reserves. This is where the story gets geopolitical and deeply alarming for anyone holding dollar-denominated savings. Central banks are systematically diversifying away from the US dollar. The dollar's share of global FX reserves has slid to a 2-decade low. Foreign ownership of the US Treasury market has dropped from over 50% during the financial crisis to approximately 30% as of early 2025. De-dollarization is most visible in commodity markets. China and Russia have been trading energy in yuan and rubles since 2014. By late 2023, yuan-ruble settlements accounted for roughly 80% of bilateral Russia-China trade. Saudi Arabia is in active talks to price some oil sales in yuan. In Brazil, the yuan has beaten out the euro to become the country's second most important reserve currency. The BRICS bloc expanded in January 2024 to include Egypt, Ethiopia, Iran, Saudi Arabia, and the UAE, a group now representing over 40% of the world's population and roughly 26% of global GDP. China's central bank has signed bilateral currency swap agreements with 41 countries, totaling $480 billion. ASEAN members agreed in May 2025 to settle external transactions in local currencies. The digital yuan has already processed over $13.9 billion in pilot transactions. JP Morgan has assigned a 35% probability to a US or global recession in 2026, with their currency desk turning bearish on the dollar. Morgan Stanley views the dollar as historically overvalued. Every single one of these moves chips away at the infrastructure that makes the dollar the world's reserve currency. Asset number 4, Bitcoin and digital reserve assets. This one is the most controversial and perhaps the most forward-looking of all. While central banks are not yet buying Bitcoin en masse, the institutional groundwork for a Bitcoin reserve era is being laid at a pace that would have seemed unthinkable 5 years ago. Fidelity predicted that countries and central banks that once avoided Bitcoin would start buying it in 2025, stating that not making any Bitcoin allocation could become more of a risk to nations than making one. The Czech National Bank's governor proposed Bitcoin as a reserve diversification tool in early 2025. El Salvador has adopted it as a reserve asset. The United States and China already hold Bitcoin primarily from seizures, not deliberate purchases, but a line between the two is blurring. A 2025 research paper described Bitcoin as sharing several characteristics with gold: high liquidity, limited supply, no counterparty risk, and limited correlation with traditional assets, calling it a potential modern cornerstone of financial security. Over 100 countries are now exploring central bank digital currency development. The race to digital money is not simply about convenience. It is about control, surveillance, and positioning for the next monetary system. When the reset comes, those holding the assets that underpin the new system will preserve wealth. Holding only the assets of the old system may not. So, what does all of this mean? It means the world's most sophisticated financial institutions, the very ones that created the current monetary system, are quietly positioning themselves for its replacement. Global debt reached $307 trillion in 2024, representing 336% of global GDP. The U.S. debt GDP ratio stands at approximately 123%, well above the 90% threshold historically associated with reduced economic growth. The system as it currently exists is mathematically unsustainable. The question is not whether a reset will come. The question is whether you will be positioned on the right side of it when it does. Now, we want to hear from you. Do you believe a global currency reset is genuinely underway, or is this being overstated? Are you personally holding any of these for assets? Drop your thoughts in the comments below. And if this gave you information you hadn't seen anywhere else, consider subscribing. We dig deep into the financial stories that affect your wealth, your savings, and your future every single week.